Here we are. We're back at the Benzinga Cannabis Capital Convention. And with me right now is Paul Penney from Safe Harbor Financial. And I have to tell you, this is the first time Paul and I have met. We've had a nice conversation before the interview, so I am totally educated on what's going on now. Not really. But I'm going to introduce you to Paul. Paul, welcome to our Cannabis News Florida.
Thanks for having me.
And Paul, tell us a little historical background of Safe Harbor, and then we'll go into some more questions.
Great, thanks. Yeah, so Safe Harbor is born out of a credit union, Partner Colorado Credit Union in Denver, Colorado, and they were early and often in banking the cannabis space. Started back in 2015 in just banking some single state operators in the Colorado market. And from there, it's grown into a very sizable business. Today, we bank over 600 cannabis-related businesses across, I think, 22 states. And it's become such a big business that it will be essentially spun out or bought by a publicly traded entity called Northern Lights Acquisition Corp. And we will soon be a publicly traded company on the NASDAQ exchange.
Very exciting, very exciting. This also, for most people watching this, will be from the state of Florida. And I did ask Paul. Paul does operate in the state of Florida with some of the MMTCs in the state of Florida. So tell us, there's obviously a vast financial aspect of the business, but tell us where you're out there trying to help cannabis companies that really nobody else is able to do right now.
Sure. So taking that deposit foundation as a bank and as a credit union, the next step for us is to layer on lending into the space. And so I've been brought in as the chief investment officer to lend to good businesses in the space, and that's what we're doing now. So we have the ability to lend off our deposit base, which is it's a pretty novel concept within the cannabis banking space. And there are a lot of private lenders out there. There's not much capital out there in terms of institutional capital. It's mainly private funds. There's a few publicly traded lenders out there from the IIPRs on the sale-leaseback side, the AFC Gammas and so forth, but in the New Lakes of the world and the Chicago Atlantics. But it's a small subsector in the space, and there's it's just in any early stage industry, there's a tremendous need for capital, both on the initial capex side and the operating capex side. And so we're, a big portion of our growth will come from making loans into the right businesses within the cannabis space.
And again, part of it is you're actually dealing with a state-chartered bank. You're not dealing with a private vendor lending you money, a little bit more institutionalized type situation that you would see. Obviously different, but the same as going to a bank, local bank, and getting a loan. It's kind of the same process. The good thing is, in talking with Paul, is they work very closely with the federal regulators to make sure that they only deal in quality clients, which makes the business a lot better than some out there. And that's why a lot of banks don't want to deal with it, because there's too much red tape. And Paul, tell us a little bit how you've really solved that problem. It's a deep dive for the company to be able to do that. It's not just, as we were talking about, if I want to open up a bank account and get a loan, you basically show your driver's license and you're cleared. Obviously, a lot more goes into what you need to do in order to get quality clients.
Yeah, I mean the BSA and KYC requirements to bank a cannabis-related business is quite onerous, and it's onerous for a reason, because of the federal illegality today at the federal level. And so as a result, you really have to know your client from a really deep granular level, and that means really understanding the flow of capital, the flow of cash, where that cash came from, and ultimately it's every company that banks with us is a extremely high quality cannabis company.
Right. Now, you were talking about the company is in the process of expanding or being bought, which will give you a lot more ability to do some things. Where do you see that? Where do you see the company in the next couple of years in this business?
Sure. So again, taking the foundation of deposits, the next layer of growth is lending and lending off our deposit base. And then from there, there are a lot of pain points in the cannabis space. If it's payments, if it's custodial services, if it's insurance, there are a lot of pain points. So ultimately, our goal is to become a diversified financial services company and help solve those pain points. And that's a big undertaking, but the team that we're building at Safe Harbor is extremely strong, extremely relevant, and credible in the cannabis space, and really deeply understand the pain points in the space. And ultimately, I think as we look to solve those pain points, our business will be diversified and be quite large.
Part of the issue I know with some cannabis companies is payroll and payroll processing. Have you gotten into that, or a company looked into that, or worked through your banking to be able to ease that burden a little bit?
Yeah, that's another pain point as well. So yeah, there's a number of companies that we're partnering with there, and I think it's a good point. It's another pain point that we'll be looking to solve.
Right. So again, the businesses out there, if you're in the business and want to get into the business, especially in the state of Florida, we're very limited here on banking. As I was telling Paul, my knowledge of going to different places, different venues for shows, I think I've run into maybe 3 small banks in the state of Florida that will even talk to you. Now, I'm not sure what they'll wind up doing or charging or whatever, but even talk to you. So Paul, how does the process begin? So, you have a lot of changing of licenses also in the state of Florida. So a new company comes in, they're wanting to buy a license, they have to start a relationship with somebody. Is that kind of where you kind of step in as a financial service to be able to help them out?
Yeah, so we're lending across the spectrum. In terms of startup entities, there are a number of there's a lot of need there, but essentially, again, we're a debt investor at this point. We need these startup companies to have adequate equity capital into the business for us to layer on debt capital on top of it. But we lend across the spectrum, from startups to cultivation construction, all the way through the supply chain, all the way up to some major publicly traded MSOs.
Right.
There's a large spectrum of sub-verticals within cannabis, and we will be serving all of them. And what me and my team do is really look at each individual loan on a risk-adjusted basis. And every loan, there's no 2 loans are equal. Right. They're all very dynamic and priced appropriately. Ultimately, our job, and the way I view our job, is to help empower these businesses to become something bigger than they are today. And again, our ultimate goal is not to nickel and dime these companies for every single basis point on the rate, or every single basis point or on fees. Our ultimate goal is to build a long-term relationship with them, build a partnership with them. And as corny as it sounds, I think that's lacking in this space, because there's a lot of abuse on the lending and investing side, because there's a lot of ignorance at the operator level sometimes in terms of capital markets, and there's also there's not a lot of capital to be had in the space. So as a result, with limited supply of capital, lenders and investors can really, they have the leverage, and they can really set the terms, and operators have no choice to take them. I think we are a new and refreshing alternative to companies that are looking to grow.
Oh, for sure. I mean, companies starting out now looking to buy licenses I know in the state of Florida, go through a ramp up as far as capital and getting investors, and that's one part of the business. But once you get to that level and you got your investment dollars, not debt dollars, but investment dollars, you need to be able to deal with somebody. I was thinking for not only banking, but lending, lines of credit, and that type of stuff, that traditional banks are just not going to give you at all.
Correct. So, well said. I think, layering on, think of us as the second layer of capital, above and beyond the equity capital, which is the foundation for a company, but as the second piece of capital on the debt side, we're looking for, we're living and breathing in senior secured lending at this point. So that means we need some form of collateral, and that collateral package for us is quite broad and diverse. It starts with real estate. That's the easiest and most tangible to understand and underwrite to. But it also goes down from there in terms of we're underwriting license value.
Sure, absolutely right. Yeah.
And then inventory, accounts receivable, down the balance sheet. I mean, there are a number of assets, and again, that's where we look for to build collateral value to protect us in our capital.
Right, and again, the values of licenses, depending on the state, obviously,
Correct.
the value of licenses. In the state of Florida, licenses are fairly expensive, whereas maybe in California they're not.
Correct. So as a result, right, you'll see our portfolio in time as it grows and evolves to be heavily weighted toward limited license states,
right,
and in states that have a framework that sets up companies for success. For instance, Florida, and also states that are going to be transitioning from a medical framework to an adult use framework,
right,
because that step up and that multiple of potential, the TAM of business from a consumer standpoint is typically between 3 and 5x from a medical standpoint. So states like Massachusetts, Ohio, Arizona, Florida, Illinois, Pennsylvania, just to name a few, those are states that you'll see us be actively involved because at a top level, from a regulatory framework, it's really favorable for these businesses. If you do have a license, you do have a stronger chance of succeeding versus other states. California is a whole other monster all in itself. We can talk about that for hours. But California, for instance, is not a limited license state. It's very crowded. You have the problems of high excessive taxes. You have an illicit market that's raging.
Right.
It really makes it hard for a credible cannabis company to really make money. And as a result, you're seeing, I think you'll see a number of companies either consolidate and find a dance partner, and or close up shop.
Right. I was about to say, do you think the laws in California would change some to kind of have a better handle on the cannabis industry? It sounds like I hate to say it's like the wild, wild west.
Yeah, I think California, which is the biggest cannabis market in the world, there are a lot of pluses, but ultimately the regulatory framework, I think Governor Gavin Newsom has gotten the memo from the credible cannabis operators to lower taxes, to truly go after the illicit market and shut down folks. That will be a great start, because ultimately now a number of California companies, to keep the lights on, are forced to sell a portion of their flower on the illicit market, and sell a portion out the front door legally, and it's not a recipe for success.
No.
And ultimately, I think they need some changes, because there's a lot of California companies that I know that are really struggling, and it's really hard to make money, especially again when you're working so hard and you ultimately have no free cash flow at the end of it. It's a tough business.
And why do it?
Yeah, why do it? And ultimately, you have a lot of tired operators in California that are really scratching their heads, going, okay, this isn't what this is not even close to the expectation I had of entering the cannabis business.
Right. What would you say to businesses here that are, with a market that's a vertical market like Florida, and not all? In fact, I guess we're one of the few that's vertical. How do you deal? How do you play in the market where you have your dispenser, you have your growers, you have your processors, and then you have a separate license for dispensaries? Do you work with all of those people?
Sure. So it's a great point. So ultimately, our clear preference, is to be invested and have a loan with a company that is as a vertical operator. Seed to sale, and those benefits are becoming even more pronounced today. So for instance, if you are, going back to California, if you are a single brand that does not have cultivation and does not have retail outlets, it's increasingly hard to get on shelves. You have to pay slotting fees. You have to compete with the bigger companies that own the retail shelf, and increasingly they're going to be favoring their products and their brands versus yours.
I've heard that from somebody else today.
Correct. And then on the cultivation side, if you're just a pure cultivator, I mean, there's a number of states that have there's supply issues, excessive supply, and there are a few states that I think the red flags are going up in a big way again, and you're going to have issues in terms of the eventual sale price of that wholesale flower. So again, if you're vertically integrated and you control from cultivation all the way to sale, you're not only you can really control your own destiny, and ultimately you see those companies that do it the best, you see it in their margins. The ultimate scorecard is the income statement and the cash flow statement, and if you look at the largest MSOs, from the True Leaves and the AYR Wellnesses of the world, It's no surprise that those two companies have the best margins in the business because they're vertically integrated in each of their states.
And even in the states where it could be a separate dispensary, they control that vertical market themselves also.
Correct. Like in your home state here, I mean, True Leave is a great model of they dominate Florida, and you see it in their income statement, and they have low 40% EBITDA margins, and there's no one even close. And then you look at an AYR that I think is a company that we're very favorable on. Right. They're in 8 states. And their goal is to be vertical in each of those 8 states, and you see it in their income statement. They have EBITDA margins in the low 30s, and then on the flip side, the ones that aren't vertical, you see it in their margin structure.
Well, how do you play in the states that are not vertical markets, and you have to get the 3 licenses? That's a little bit dicey to a certain degree when you may have your independent dispensaries out there that can take on everybody's product, and you may feed some product in there, but not all. But still, the model of grow, process, and sell is a much better model.
Correct. I mean, but so you just have to be highly selective and backing the right operators if you're not vertically integrated. But a lot of the ones that aren't today, they have plans to do so.
Trying to do that, right?
And so my involvement over the years in terms of my board involvement and so forth with advisory, the different companies I've been in, that has been a clear directive from me and the board to these companies is to get vertical. If you're not vertical, get there, and if not, be careful. Have your head, be nimble, and potentially look to consolidate your business, because ultimately you might be intermediated, and you need to be proactive on that.
Yeah, because I think part of the issue in I know this state is a lot of people are saying, well, we understand the growing, we understand the processing, but we really want a CVS, Walgreens model where, for $50,000 I can get into the business and open up a dispensary. You think that's harmful to the industry?
I do, and I think you're going to see that kind of abuse, and it starts from a regulatory framework that, in my opinion, isn't really well thought out. Not to pick on Oklahoma, but Oklahoma is a state where it's very easy for you and I to go get a license for $50,
right?
And you and I to start a business, and it's saturated. It's already quickly become saturated in a few short years, and so states like Oklahoma. Oregon, Washington, that are mature markets that are not limited license states. You just have to be highly selective and ultimately just be very careful. But you'll see our involvement, again, because there's still a lot of growth in either the limited license states or states that are medical to be adult use, like a Florida. Those are states where we'll spend a lot of our time and capital investing in.
So in the state sense, you would say if a legislative person came over to you and said, should we getting so much pressure, should we change from vertical to maybe a limited horizontal, okay? Whereas maybe, like I say, just the dispensaries, you would recommend not doing that as a business model.
Correct.
That's good to know, because a lot of people are saying out there that would be better. I'm not sure. I was just talking to somebody earlier that has a grow in California, and and he's trying to sell his product, and right now he's at the demand of the person wanting to buy the product. So all of a sudden, he said, well, I already got my shelves filled with somebody else's product. I don't need your product, and now you got nothing to do with it.
Correct, and that's what I was talking about. That's what I was talking about earlier. It's a big problem, and in California again, on the cultivation side, if you're just married to wholesale production and wholesale selling on a wholesale basis to companies, it's going to be a commodity, and there are some pretty big operators like the Glass Houses of the world. Glass House, what they're building at scale is incredibly impressive. The market doesn't care today. It's a publicly traded company, but what they're not building for next quarter or next year. They're building infrastructure-wise. They're going to have. I think they're poised to have the lowest cost flower in the country. We're talking $150 a pound, which is hard to compete with. Right. Again, if you're a single private company, it's going to be hard to compete with that.
Right.
So I think you have to be very, very careful, and so those pitfalls we proactively look to avoid. And I think a lot of these operators just don't have, where we sit. We have kind of a really broad lens of the United States, and we can be picky and choosy in terms of where we choose to put our capital to work. And a lot of these companies are just myopically focused on their business, and they don't see the forest through the trees.
Right. Paul, I know you got a busy day, rest of the day today. I want to thank you for stopping by. Very informative for those who need to get a hold of Paul. Want to just talk to him. I mean, if you're getting into the business, want to get into the business, or you're in the business right now, kind of local, small, looking to expand what to do, how to do it, Paul's probably a good conversation to have. Paul, how do people get a hold of you if they wanted to get a hold of you? How's the best way?
Sure. Welcome to email me. It's Paul at shfinancial.org. So again, Paul at shfinancial.org.
And you can find him if you go to Safe Harbor Financial, Google it like I did, and you can find out all information about Paul. And then, if you're in the business, it's a good education to understand where people may say, well, this is better than the other. And it may seem better in the short run, but it sounds like in the long run it's not. So, Paul, I thank you for stopping by and seeing us.
Appreciate it.